12 of the intermediate syllabus is concerned. A কথা আসছে. Now the objective is to do the important topics and the various important chapters which will be required for the forthcoming examination. Now, I express my sincere thanks to Director of Studies, Senior Director Nondi sir, Joint Director Madhumita madam, and also Chairman, and also Mr. Anand, the Central Council member, for giving me this opportunity to share this management accounting paper, that is paper 12, so far your intermediate curriculum is concerned. Before I going to start, let me tell you some important concepts. Now you see, it is the era of specialization and globalization. Competition is huge, and in India, the manufacturer cum sellers, they are required to compete with international giants because many of the industries, they are actually entering into India and posing certain important threats to the Indian organizations. So the objective of this management accounting is that what are the various techniques which are to be followed in Indian condition so that we can meet the competition, we can increase our market share, and also we are be in a position of cost leadership so that our total cost is minimum, so that we can meet the price, because we are actually operating in bias market and we are not in a position to fix the price according to our choice. So that's why the importance of management accounting having great importance in the context of competition, in the context of calculation of cost, in the context of cost reduction and cost control. Now, today you are going to start with activity-based costing. Now, I'm going to share the concept. You see, if we are going to follow the traditional costing system, this traditional costing system is nothing but it takes into consideration a single rate, which is called blanket rate, for absorbing the overhead cost to the various cost objects, products, etc. Now, traditional absorption costing uses a single basis for absorbing all overheads into cost units for a particular production department or cost center. Now, this is the fallacy of this traditional costing system, and that's why in this traditional system, a business will choose the basis that best reflects the way in which overheads are being incurred. For example, in an automated business, much of the overhead cost will be related to maintenance and repair of the machinery. So, based on the traditional costing, it is likely that this will vary to some extent with machine hours worked, so that we are going to absorb the overheads into the cost, taking into consideration machine hour absorption rate. Now, as the diagram suggests, you see, if there are certain overheads namely production setup cost, then machine oil, supervisor salaries and machine repairs. Then we are going to consider these overheads pertaining to production department A, and we are calculating overhead absorption rate on the basis of machine hours. Now, if we look into this another picture, you see in traditional costing, what we are doing, we are preparing primary distribution and then we are preparing secondary distribution, and then service. First, we are going to apportion the overhead cost to the both production and service departments, and then we are going to reapportion the service department cost to the production departments, and then finally we are going to calculate the overhead absorption rate based on machine hour or labor hour, whatever it may be, and we are going to charge to the product lines. So service and production overheads, that is assigning cost using measure of service usage, and various production departments are there and we are allocating the cost or charging the cost using a measure of volume. Now let us come to the concept. Traditional product costing system is also referred to as functional based cost accounting system or volume based costing system. So basically traditional cost accounting or product costing, also known as functional based cost accounting or volume based cost accounting, and these are allocating the overhead to the various products on the basis of either machine hours or labor hours or direct labor cost, so and so forth. So that's why traditional or conventional product costing system determines product cost by way of allocating in the first stage direct cost to the products. So obviously, so direct material, direct labor and direct expenses which are to be charged directly to the products or cost object, and overheads we are going to apportion between production and service department. Then there will be reapportionment of service department cost to the production departments, and then we are going to calculate the overhead absorption rate either on the basis of labor hours or machine hours or direct labor cost, and based on these rates we are going to charge the overhead cost to the various cost objects or products. So this costing system is based on the assumption that all overheads are related basically to production volume. Okay, so mind that traditional costing is going to give emphasis on that all overheads are related basically to production volume. But in practical life situation, in a modern scenario, this is not actually correct. Why? That I am going to discuss. Now, let me discuss about volume-based overhead rate. The factory overhead rate in a volume-based costing system is either a single overhead rate for the entire operation, that is plant-wide rate. This is also called plant-wide rate, or a set of overhead rates with various rates for different departments or divisions. These are called departmental rates or department rates. These overhead rates use an output volume-based activity or activities to assign or to spread factory overhead costs to products or services. So again, I am repeating, we are giving emphasis on that is volume-based. An output volume-based costing system spread cost evenly so that each cost object, product or service receive the same amount. So that is the fallacy, because if we are going to give emphasis on volume related and production related, then automatically the cost objects or the products, they will be getting the same amount of overhead absorption. That is not correct. So first we would like to understand the limitation of volume-based costing system. Now, because why we are going to apply the very concept that is activity-based costing, and why activity-based costing should be initiated and installed. And for this reason, we are discussing the various limitations of volume-based costing system. Now, if we look to the first point, different products utilize different amount of resources. Obviously so, which is not recognized in traditional costing system. So, different amount of resources which are actually being utilized, because it varies from product to products. So that's why I have mentioned different products utilize different amount of resources which is not recognized in traditional costing system. Next, overheads now constitute the largest share of cost. Okay, so about often it may go greater than 50% and are typically applied to products as a percentage of the smallest cost, that is direct labor, leading to serious distortion of product cost. So if I am going to consider the amount of overhead on the basis of direct labor only, then obviously it is going to vitiate the product cost. Why I am telling you, say you are manufacturing three products, A, B and C. A's selling price is much more as compared to B and C, but A requires less labor hours, okay, and B and C requires more labor hours, and hence if we are going to use the absorption of overhead on the basis of direct labor hour, then the first item which is going to be priced at a higher price, it will consider lower cost. Whereas other two products, not likely that it is the selling price is same to A and B, then automatically they will consume more cost and there will be over costing of B and C and under costing of product A. So that is the main fallacy. Coming to the third point, by relying on volume related measure to determine product cost, traditional costing system do poor job in reflecting supporting cost for manufacturing and distribution of products or services. So supporting cost, so far the manufacturing and distribution of products or services are concerned, if we are going to use only volume related, then it ignores factory overhead such as setup cost, material handling cost, product design and research, and development cost are unrelated to the number of units produced. So these are all cost, these are all supporting cost. Then if we are not going to consider these factory overheads in the form of supporting cost, namely setup cost, materials handling cost, product design and research and development cost, okay, then automatically there will be a fallacy. Number fourth point is traditional costing system tends to overcost standard high volume products and undercost low volume products, leading to incorrect pricing and product mix decision. Now, fifth disadvantage, it creates a bias toward direct labor reduction as a cost reduction rather than overall productivity improvement. Point number 6, it provides no information useful in either identifying productivity improvement opportunities or determining if productivity improvement efforts have yielded significant results. So often traditional costing system indicates higher cost in the presence of known productivity improvement or vice versa. So in this limitation, what you are required to remember, you just remember supporting overhead costs in the form of setup, material handling, product design, research and development costs are not taken care accurately in the traditional costing system, and that leads to under and over costing of the different products. Now, if we look into one by one, traditional product costing system, overheads assigned to production departments, state to overheads allocated to products, overhead cost, then departmental production overheads, then departmental overhead allocation rates, and on that basis you are going to charge to the products. Whereas in activity-based costing, overhead assigned to cost centers or cost pools will come what is called cost pools. Stage 2, overheads assigned to products using cost driver rates. So what is cost driver rates? That is also we are going to discuss. Now overhead cost, we are going to relate this overhead cost into various activity cost pools. Similar overhead costs are grouped under a single pool of cost, that is activity cost pool. Then we are going to decide the activity cost driver rates, and once the cost driver rates are actually being derived, we are going to charge the overheads on these different activity rates over the products or the cost objects. That we are coming. Now, production overheads are by no means all volume related, and hence a single basis for absorption, namely machine hours or labor hours, would not adequately reflect the complexity of producing certain products or cost units as opposed to others. ABC is an extension of absorption costing, specifically considering what causes each type of overhead category to occur. That is, what the cost drivers are. Each type of overhead is absorbed using a different basis depending on the cost driver. Now, if we are going to consider, say, few activities, namely production setup cost, then its cost driver will be number of production setups. Machine oil and machine repairs, it will be on the basis of total machine hours. Supervisory labor, it will be based on total labor hours. So we are having different cost drivers, and taking into consideration the cost pool and cost driver, we are going to calculate different cost driver rate for production setups, then machine oil and machine repairs, then supervisory salary, etc. And we are going to charge the overheads accordingly. Now, we are coming to define the activity-based costing as it is given by Chartered Institute of Management Accountant, London. So it is the CIMA official terminology. Activity-based costing is an approach to the costing and monitoring of activities which involves tracing resource consumption and costing final outputs. We will discuss every one. Resources are assigned to activities and activities to cost objects. Cost object means a product, maybe a customer, so on and so forth. To cost objects based on consumption estimates. The latter utilize, that is cost objects utilize cost drivers to attach activity cost to outputs. So looking into this particular terminology, which is actually given by the CIMA as per their official terminology, but activity-based costing you are going to consider in a simple sense. How that we are going to discuss. The activity-based costing, in short it is ABC, is a costing system which focuses on activities performed to produce products. So mind this language. Activity-based costing is a costing system which focuses on activities performed to produce products. That was not actually being done in traditional costing. ABC is that costing in which costs are first traced to activities. So we are going to trace the cost to the activities and then to products. So tracing of cost is first done to activities, and then we are going to relate the cost to the products. This costing system assumes that activities are responsible for the incurrence of costs and products create the demands for activities. So it is a very important line. This costing system assumes that activities are responsible for the incurrence of cost. So cost will be incurred based upon the different activities. Okay, and based upon the different products, we are going to have different activities that we are going to correlate. Okay, costs are charged to products based on individual products' use of each activity. In traditional product costing, costs are first traced not to activities but to an organizational unit, such as department or plant. Now, in absorption costing, definitely in your cost management accounting paper, you know that there are various production and service departments. Okay, in an organization. First, we are going to make the primary distribution and apportioning the common cost, that is overheads, to various production and service departments according to certain suitable basis. Then in service departments, there is no question of any production. Hence, we are going to reapportion the service department cost to the production departments, and finally we calculate the total overhead cost of the various production departments. Once the cost is actually being calculated, then we are going to divide the departmental overhead cost with machine hours or labor hours so that we can get the overhead recovery rate based on machine hour or labor hour. So that is done in traditional costing. But ABC, that is activity-based costing, as compared to traditional cost system, is based on one fundamental difference. So what is the fundamental difference? Under ABC, activity and product or service cost are determined based on the primary principle that activities consume resources. And for that, there are certain incurrence of cost. Mind the language. Primary principle is that activities consume resources, that is cost. Products and services, cost objects, in turn, consume the activities. This principle is fundamentally different from traditional costing system, whose premise is that product or services consume resources directly and activity costs are not calculated at all. So that is the main and major drawback so far the traditional costing or absorption costing is concerned. This principle, again I repeat, is fundamentally different from traditional costing systems, whose premise is that product or services consume resources directly and activity costs are not calculated at all. But ABC takes into account this thing. So service department and factory overheads, assigning cost of individual activities, then there are creation of activity pool, that is coming under stage 1, and under stage 2, calculating the cost driver rates, we are going to charge the overheads to different product or product lines. Now, stages and flow of cost in ABC. Step 1, identify an organization's major activities. So, identification of the organization's major activities is the key task in activity-based costing. Now, if I say major activities, now in the context of activities, there are certain activities which are called value-added activities, and there are certain other activities which are called non-value-added activities. Let me tell you what is the meaning of value-added activities. So the activities which are going to be performed by the organization for increasing the value of the product or worth of the product, so that consumers are going to pay the higher price for that. That is inspection, quality control, and all the activities which are going to increase the value of the product, which are called value-added activities. So some value addition is actually being done with reference to different products. Non-value added activities mean, supposing there is a big distance between stores and production departments. So you have to carry the raw materials from the store and issuing to the production department. It requires handling of materials for several times. Okay. And for that you are going to incur certain cost, and these costs for which customers, they are not going to pay you the money. So that is called non-value added activities. So in step 1, what I have said, identify an organization's major activities. Once the major activities are identified, keeping in mind the value added activities, we are going to step 2, that is identify the factors, that is cost drivers, which cause the cost of the activities. Step 3, collect the cost associated with each activity into cost pools. Then step 4, charge the cost of activities to products on the basis of their usage of the activities. A product usage of an activity is measured by the number of the activities cost driver it generates. Now we are taking an example so that you can easily understand. I'll be discussing thoroughly about cost pools, cost driver, etc. after certain time, so that you can understand what are called cost driver, what is called cost driver rate, what is cost pool, and what are the functions of these cost pools, etc. so that you can easily understand about activity-based costing. Now, what I have written, there are 2 primary stages in ABC. What are those? First, tracing cost to activities, and secondly, tracing activities to products. So first, tracing cost to activities, and secondly, tracing activities to products. The different steps in the 2 stages of ABC are as under. Now, step 1, identify the main activities in the organization. Examples include material handling, purchasing, receipt of material, dispatch of materials, machining of the materials, assembly, and so on. So first step is identify the main activities in the organizations. Second step, identify the factors which determine the cost of an activity. So these are known as cost drivers. Mind the language, identify the factors which determine the costs of an activity. These are known as cost drivers. Examples include number of purchase orders, number of orders delivered, number of setups, and so on. Once the step 2 is completed, Then we are going to have step number 3. Collect the cost of each activity. These are known as cost pools. Say all related costs, say cost related to purchase orders. We are going to group it into a particular pool, that is under a particular head, that is known as cost pool. So collect the cost of each activity. These are known as cost pools and are directly equivalent to conventional cost centers. Step 4, charge support overheads to products on the basis of their usage. Usage here means consumption of the activity expressed in terms of the chosen cost driver or drivers. For example, if the total cost of purchasing were 2 lakhs and there were 1000 purchase orders, the chosen cost driver product should be charged rupees 200 per purchase order. Thus, a batch generating 3 purchase orders would be charged 3 into rupees 200. It comes to rupees 600 for purchasing overheads. Now, up to this, I think you have understood. If you are having any question, please feel free, and I'll be answering your questions. You can write it into the chat box, okay, so that we can discuss it after certain time. So I think, so for the stages in ABC are concerned, I think you have understood, because I have clearly spelled the step 1, step 2, step 3 and step 4, and finally how we are going to trace the support overhead cost to the various cost objects. That is easily understandable. Now, same thing I have expressed in a different form. First, we are going to have the resources. Then we are going to have resource drivers. Then we are going to have the activities. Then we are going to have the activity drivers. And we are calculating multiple overhead rates. And on that basis, on the basis of this activity driver rates, we are going to charge the overhead to different cost objects. Now, we are going to discuss one by one, that is cost assignment under ABC. First, you may think that what is the meaning of resources? Resources are what organizations spend their money on, the categories of cost that are recorded. Resource is defined as an economic or money element that is applied or used in the performance of activities. Okay, say salaries, materials purchased, for example, are resources used in the performance of activities. So that is the concept of resource. Additional examples of resources include repair, inspection, rent, depreciation, utilities, insurance and supplies, etc. Most ABC systems currently exclude costs like income taxes and interest expense. So these are not actually being taken care of. This is purely a financial item. So most ABC systems currently exclude costs like income taxes and interest expense that are not used in the performance of activities. So these are excluded. Then once we are sure about resources, then we are going to have, just a minute, then we are going to have the concept of resource drivers. Now at this time, you may ask you, sir, what do you mean by resource drivers? So that I have explained in a lucid sense. Resource drivers are the basis for tracing resources to activities. How? Resource driver is defined as a measure of the quantity of resources consumed by an activity. An example of a resource driver is the percentage of total square feet of space occupied by an activity. This factor is used to trace a portion of the cost of operating the facilities to the activity. Examples of common resource drivers for salaries, wages, rent, equipment, depreciation, and utilities include the following. So, salaries resource driver is percentage of people's time spent on each activity, headcount assignment, etc. Hours spent on each activity. Rent or facility cost, square feet of facility consumed by each activity, cubic feet of facility consumed by each activity, equipment depreciation, specific analysis to associate equipment used to each activity, then machine utilities, electric, that is machine, time by activity, kilowatt hours consumption by activity, square feet of facility, so on and so forth. So this is called resource and resource driver. So once we reach this, we come forward for activities. Now I'm giving you a practical example so that you can easily understand what are the meaning of activities. An activity is a unit of work. Just for an example, if you go to a restaurant for lunch or dinner, a waiter or waiters might perform the following units of work. Sit customer and offer menu. Take your order. Send orders to kitchen. Bring food. Replenish beverages. Determine and bring bill. Collect money and give change. And clear table. So each of these is an activity, and the performance of each activity consumes resources that cost money. Okay, I think you have understood what are the meaning of activities. Now, activities represent work performed in an organization. The cost of activities is determined by tracing resources to activities using the resource drivers. Now, for an example, I'm just citing this example to you. Resource receiving department salaries. Resource driver is percentage of time. And activities are receive materials, that is 10%. Unload trucks 20%. Move material, say 10%. Schedule receipts, that is 15%. Expedite material 20%. And resolve vendor error. There might be certain errors by the seller or the vendor. Say it is 25%. So 100% is actually segregated into different activities. 10%, 20%, 10%, 15%, 20 and 25, so that it is 100%. Now, if receiving department salaries total rupees 20 lakhs, the cost of each activity would be as follows. Receive material, that is 10%, that is 2 lakhs. Unload trucks, that is 20%, that is 4 lakhs. Move materials, that is 10%, which comes to 2 lakhs. Then 15% is the scheduled receipts, that is 3 lakhs. Then expedite material 20%, that is 4 lakhs. And resolved vendor errors, that is 25%, that is 5 lakhs. So total 20 lakhs has been segregated into the various activities in the form of receive materials, unload trucks, move material, schedule receipts, expedite material, resolve vendor errors, and 20 lakhs is actually being shared. Now, in practice, a single resource and resource driver would be rare. the receiving department of a large organization is likely to have multiple resource and resource drivers. Total activity cost would be determined by tracing each resource using an appropriate resource driver to the receiving department activities. Once determined, activity cost can be traced to cost objects using activity drivers. Now we are coming to another important phenomena, that is activity cost drivers. Please try to understand the subject. Please try to understand the concept involved in activity-based costing, because when you will pass the final examination and when you are going to do your job in many organizations nowadays, big organizations, the activity-based costing perception is followed. So once you know the subject, then it will be easier for you to crack the interview also, and also to involve more and more with your theoretical knowledge in the practical scenario. So I have worked 27 years in various organizations, and what is most important, what I have felt, that I am having more than 32 years of teaching experience also, and what I want to mean, once you have the concept and perception, then you can easily apply these in your examination, not only, but also for cracking the interviews and finally getting the job. Now we are coming to fourth item, that is called activity cost drivers. Now you may be interested in knowing what is the meaning of activity cost drivers. Like a resource driver, what I have already explained, that is used to trace resources to activities. So there will be a linkage between or tracing between resources to activities. An activity cost driver is used to trace activity cost to cost objects. Cost objects are the ultimatum, where you are going to charge the overhead, supporting overheads over the products. An activity cost pool is a container. Let's say it is a container, or it is a pool, POOL, in which costs are accumulated that relate to a single activity in the ABC system. So various activities are there. So based on your various activities, similar activity you are going to put in a particular container, that is called cost pool. Activity driver is defined as a measure of the frequency and intensity of the demands placed on the activities by cost objects. An activity driver is used to assign cost to cost objects. A cost driver is an activity which generates cost. A cost driver is a factor such as the level of activity or volume that casually affects cost over a given time span. That is, a cause and effect relationship exists between a change in the level of activity or volume and a change in the level of the total cost of the cost object. Thus, cost drivers signify factors, forces or events that determine the cost of activities. Based on activity usage, that is consumption, activity costs are traced to cost object. So the cost driver rate we get activity cost based upon the cost pool divided by activity volume. Some examples of cost drivers I'm going to give, but remember, SEMA official terminology has defined a cost driver is a factor influencing the level of cost. Now, activity or activity center and activity cost drivers may be explained. Number one, accounting personnel. activity cost drivers: report requested, amount expended, job change actions, hiring actions, training hours, counseling hours. Data processing, reports requested, transactions process, programming hours, program change request. Production engineering, hours spent in each shop, job specification charges requested, product change notices processed. Quality control, hours spent in each shop, defects discovered, samples analyzed. Plant services, preventive maintenance cycles, hours spent in each shop, repair and maintenance actions. Material services, money value of requisitions, number of transactions processed, number of personnel in direct support. Utilities, direct usage, metered to shop, space occupied. Production shops, fixed per job change, setup mode, direct labor, machine hours, number of moves, material applied, etc. Run machines, machine hours. Setup machines, setup or setup hours. Scheduled production jobs, production runs. Receive materials, material receipts. Support existing products, number of products. Introduce new products, number of new products introduced. Maintain machines, maintenance hours. Modify product characteristics, engineering change notices. So these are nothing but activity or activity center vis-a-vis the activity cost drivers that can be used. Now we are coming to the very perception which is called cost object. Now what is a cost object? Cost object can be any customer, product, service, contract, project or other work unit for which a separate cost measurement is desired. Okay, so cost we are going to measure so far various cost objects are concerned, and this cost object may be customer, product, service, contract, a particular project or other work unit for which a separate cost measurement is desired. The most common cost object is product or service. Activity drivers are used to trace activity cost to cost objects. Now, an example of how an activity of a sales department might be traced to customer segments, that is cost objects, is illustrated in the following exhibit. Just have a look. First, we are going to have the activity. Making sales call, that is an activity. Activity driver will be number of sales calls. And we are having cost objects, 3 different cost objects. Large customers, that is 1000. Medium customers, 500. And small customer, 3500. So what I can do, large customers, say 1 lakh. Medium customers, 50,000. Small customers, 3,50,000. So total activity cost comes to 5 lakhs. So based upon the activity, we are going to choose the activity driver, and finally we are going to charge the overhead cost to different cost objects based upon the activity cost driver rate. Now at this juncture, we may be interested to know what are the basic and most phenomenal differences between traditional and activity-based costing. So for cost pools are concerned, under traditional, one or limited number. But under ABC, many to reflect different activities. Applied rate, that is overhead rate. Under traditional, we are having volume-based cost drivers, machine hours, labor hours, like that. And under activity-based costing, activity-based cost, activity-based rate, and definitely it is non-financial, not taking into consideration income tax, interest, etc. Suited for labor-intensive, low overhead companies. ABC is applicable to capital-intensive, product diverse, widely diverse set of operational activities, variations in number of production runs, high overhead companies. Benefits: traditional is simple and inexpensive. But so far ABC is concerned, it is costly, no doubt. Accurate product costing possible. Elimination of non-value added activities can be done. I have already told you what is the basic difference between value added and non-value added activities. Then comes cost assignment. Under traditional, it allocates overhead cost first to departments and second to products or services. Under ABC, assigns overhead cost firstly to activity cost pools and secondly to products or services. So for focus is concerned, under traditional, focuses on managing cost of functional departments or responsibility centers. Now, at this juncture, let me tell you what is the meaning of responsibility center. Nowadays, with the concept of responsibility, there is a responsibility accounting where each unit or division of a company is going to be treated to be a responsibility center, okay, revenue center and investment center, where investment has been made and manager of each unit is responsible for the profit earned or loss sustained by his or her division. So in traditional costing, it focuses on managing cost of functional departments or responsibility center. But so far ABC is concerned, focuses on managing processes and activities and solutions of cross-functional problems. That is taking into consideration of different activities. Now we are coming to cost hierarchy in ABC. So you have to definitely learn this. If a question is coming on, that is, what is cost hierarchy in ABC? And if you do not know the various cost hierarchy which are actually being used in ABC, then your knowledge will be incomplete. So that's why what we are going to do, we are going to consider the cost hierarchy so far activity-based costing is concerned. Accountants often use a cost hierarchy to help them identify activities and then assign cost to these activities. ABC developers and practitioners have identified a number of general categories for the cost hierarchy based on different levels of operation. So definitely there is a direct link between the general categories of the cost hierarchy and the different levels of operations. Now we should go one by one. I have made 3 columns in which first one is level of activities, second one is examples of costs, and third one is examples of cost drivers. So basically we are having organization sustaining activities, facility sustaining activities, customer sustaining activities, product sustaining activities, batch level activities, and unit level activities. Now let us just go ahead with this. Organization sustaining activities are related to the overall organization and unaffected by number or types of facilities and customers or by volumes of products, batches or units. Examples are administrative salaries, headquarters housekeeping, information system salaries, accountant salaries, etc. And examples of cost drivers I have written, these costs are typically not allocated because they do not vary with activity volumes. Mostly these are all fixed costs. Then facility sustaining, that is, activities are related to the overall operations of a facility and unaffected by number of customers served or by quantities of products, batches or units. So we are having examples: facility, genital, service, retail store, insurance and heating, manufacturing, plant manager salaries, depreciation and liability insurance for individual hospitals in a hospital system. So these costs are typically not allocated except when the organization needs to allocate all product costs for a particular purpose. Then comes customer sustaining. Activities are related to individual or group of past, current and future customers and are not driven by total sales volume and mix. Examples: customer sales representative salaries, technical support salaries and supplies, customer market research, special tools for a customer order. So we are having different cost drivers: number of sales call, hours of technical support, then number of customers, so on and so forth. Then comes product sustaining. Activities support the production and distribution of a single product or line of products. Examples: production line supervisor salary, product advertising, product design engineer salaries, depreciation of equipment used to manufacture one type of product, and we are having multiple cost drivers, that is number of engineering change orders, number of advertisement, machine hours, so on and so forth. Then comes batch level. Activities performed for each batch of product and not related to the number of units in the batch. Example: labor cost for new setup of the beginning of a batch, utility cost for heating or clean for batches of pottery, shipping cost for batches, etc. Then cost drivers may be setup hours, number of batches, weight of order shipped, etc. And finally, unit level, activities to produce individual units of goods or services. Resource cost is proportional to production volumes or sales volume. Examples: material handling wages, production workers paid based on quantity produced, supplies used to provide services. So we may have different cost drivers: machine hours, units processed, materials quantity processed, etc. etc. Now, hope you have understood. Now, actually, what I am saying, once you know the various level of activities and if you identify the various cost drivers, then we can proceed for calculating the different cost drivers rates, and accordingly the cost is actually being, that is overhead costs are charged to the various cost objects. So that is all about your theoretical aspects and we are coming to the practical example. Now, just have a look. Give me 2 minutes time, and within 2 minutes, I am going to be back, and we'll be discussing examples. Okay, and once we finish this, we'll start transfer pricing. Now, just allow me 2 minutes, but first let me read the question. Then you please allow me 2 minutes. Suppose that C company manufactures 4 products, W, X, Y, and Z. Output and cost data for the period just ended are as follows. Output, number of production runs in the period, material cost per unit, direct labor hours per unit, and machine hours per unit. And there are 4 products, W, X, Y, and Z. And we are having short run variable cost, setup cost, production and scheduling costs, and material handling cost. So these are all overhead costs, remember, and we are required to calculate product cost using absorption costing and ABC. Just allow me 2 minutes, then I am going through the solution and I will make you understand each and every part of the solution so that conceptually you understand how to solve activity-based costing problems. Remember, solving activity-based costing problems is not difficult once you have the concepts, but it is time consuming. So in the examination hall, time management must be done. Okay, so lot of practices are required and you have to solve problems keeping into mind the time. Once you make the time, once you can manage the time, that you have to practice, then definitely you are in a position to manage the time in the examination hall. Okay, so 2 minutes please. So I'm back. Now, before starting the solution of the problem, remember, direct cost or traceable cost, which are directly charged to the products, whether we are going to follow the traditional costing or traditional costing or the activity-based costing. Problem lies so far charging of these overhead costs are concerned. Traditional cost, what I have said, it takes into account single rate or blanket rate for absorbing overhead cost to the cost objects. And for this reason, a product may be highly costed or a product may be under costed. That is the main drawback of traditional costing without recognizing the various perception of activities which are actually being performed in an organization for arriving at the cost so far the various cost objects are concerned. But as I have said, ABC, that is activity based costing, takes into account the concepts called, that is, cost drivers, resource cost driver, activity cost driver. The question of cost pools is there, and ultimately the cost driver rates are to be worked out, and on that basis we are going to charge the overhead cost over cost objects. Now, using absorption costing and an absorption rate based on either direct labor hours or machine hours, the product cost would be as follows. We are going to charge, that is, direct material cost, okay, directly to the different products, then direct labor cost. Then it is an example, remember, overheads, that is 30,800, that how we are going to charge over the different cost objects, that is products here, W, X, Y, Z, that makes a sense. And for that we are going to use the activity based costing. Now, units produced 10, 10, 100 and 100, cost per unit you have calculated. Okay. Now, if we assume that 30,800 is the total common cost or the overhead costs, okay, units produced is given 10, 10, 100 and 100. Number of production runs in the period given 2, 2, 5, 5. Material cost per unit 20, 80, 20, 80. Direct labor hours per unit 1313. Machines hours per unit 1313. Okay, so what we are going to have, we are having direct material cost, direct labor cost, and overheads are to be absorbed on a volume based, that is machine hour or labor hour. Remember here, direct labor hours per unit and machine hours per unit are the same. We may use any one, either direct labor hours per unit, either direct labor hours or machine hours for absorbing the overhead cost over the cost objects. So 30,800, how you are going to have? We are having 30,800 divided by total hours required for manufacturing all the units comes to 440 hours. That is rupees 10 per direct labor or machine hour. And on that basis, the 30,800, the overheads are actually being allocated over W, X, Y, and Z, depending upon the, that is direct labor hours spent or machine hours per unit. Whatever may be the rate, that is labor rate, the direct hour labor rate and machine hour rate is the same here, that is rupees 70, and accordingly we charge the common cost, that is 30,800 over W, X, Y, and Z as 70, 2,100, 7,000 and 21,000. So total 30,800 over its cost are allocated. And finally, we get the total cost taking into consideration material cost, labor cost and overhead. It comes to 950 for W, 3050 for X, 9,500 for Y, and 30,500 for Z, and total is 44,000. Now, units produced are given in the question. We have written that. So W cost per unit comes to 95, X comes to 305, Y comes to 95, and Z comes to 305. So single rate or volume related concept, either labor or machine hour being the same, we have used, and the recovery rate per direct labor hour is 70 or machine hour rate is 70 also same. Now using, that is the traditional, using activity based costing and assuming that the number of production runs is the cost driver for setup cost, production and scheduling cost, and material handling cost, and that machine hours are the cost driver for short run variable cost, unit cost would be as follows. So we are going to have the very perception of activity based costing, considering the premises, that is that is the number of production runs is the cost driver for setup, production and scheduling cost, and material handling cost, and that machine hours are the cost driver for short run variable cost. Then under activity based costing, we are going to have the cost as follows. Direct material, direct labor, no problem. Short run variable cost, we have to refer to working note 1. Setup cost, we have to refer to working number 2. Production and scheduling cost, we are referred to working note number 3. And material handling cost, we are going to refer to working note number 4, so that you can easily calculate. Now, workings, rupees 3080, okay, divided by 440 machine hours. Short run variable cost 3080. So 3080 divided by 440 is the total machine hours. It comes to rupees 7 per machine hour. Then 10,920 is the setup cost. So we are taking into consideration 10,920 and 14 production runs are there. Just have a good look in the question. Number of production run total amounting to 14, that is 2, 2, 5 and 5. It comes to 14. So we are going to have, that is 10,920 divided by 14 production runs, so that it comes to rupees 780 per run. The third one is 9,100, that is production and scheduling cost 9,100, and cost drivers I have selected production runs, and there are 14 production runs, so that cost driver rate is rupees 650 per run. And the last but not the least, we are having materials handling cost 7,700 divided by 14 production runs, so that we have 550 per run. So based upon the various perception, that is short run variable overheads, that is 7 per machine hour, we are going to have, that is, you see, direct labor hours and machine hours are same. So we are going to charge the overhead cost on the basis of rupees 7 per machine hour, okay, or labor hours, whatever it may be. Then short run variable cost we have got, setup cost accordingly we have got, production and scheduling cost we have got, and materials handling cost we have got. So that once you calculate the various cost driver rates, we can charge the overhead cost, common cost to the various cost objects, that is Yx, Wx, Yz, on the basis of these rates, and we get the different figures. So total cost comes to Y4280, X 5120, W4280, X 5120, Y 13,100, Z 21,500, and total is 44,000. Unit produced is given in the question. So we divide the total overhead cost by unit produced. So cost per unit we get, that is cost per unit, taking into consideration direct material cost, direct labor cost, and various overheads. So that total cost comes to, that is 4280, and cost per unit comes to 4280 divided by 10, it comes to 428. 5120 divided by 10, it comes to 512. 13,100 by 100, it comes to 131, and 21,500 divided by 100, it comes to 215. Now, if we are going to compare the cost, you see W, the cost per unit was 95, here it is 428. So there is a large difference. So for X is concerned, it was 305, that is 305 per unit. Here it is coming to, that is 512. Then for Y it is, cost per unit is 95, and under ABC it comes to 131, and in case of Z, cost per unit was 305, here it is coming to 250 less. So summary, we are going to have product Y, W, X, Y, Z, absorption costing unit cost, we have jotted down. ABC unit cost, we have jotted down. So under ABC, the cost will be more by 333. Then for X, 305 and 512, so it will be more by 207. Then 95 and 131, it comes to 36 plus 305 and 215. There will be decrease in cost under ABC to the extent of 90. So under traditional costing system, the product which is costed low, you will think that there is huge profit, but ultimately there will be no profit. And if we apply the ABC, that is activity-based costing, then we are in a position to charge the common cost, that is overheads, to the various cost objects in a rational manner, so that undercosting or overcosting of the product cost will be avoided. Okay, I hope you follow this. Now, I'm just making an analysis. The figures suggest that traditional volume-based absorption costing system is flawed. So there is a fallacy. It underallocates overhead cost to low volume products, here W and X, and overallocates overheads to higher volume products, here Z in particular. It underallocates overhead cost to less complex products, here W and Y with just 1 hour of work needed per unit, and overallocates overhead cost to more complex products, here X and particularly Z. So obviously, traditional costing having certain definite disadvantages, you will think that as a manufacturer come seller, you are going to have huge profits, but profit is not there. So activity-based costing system will be a rational concept that will be used for calculating the correct product cost, especially in the form of overhead cost. Now we are coming to the next problem. Bharti company produces two types of stereo units. deluxe and regular. Activity data are given, activity usage measures, product costing data, deluxe, regular and total. Units produced per year, then prime costs, then direct labor hours, then machine hours, then production runs, then number of moves. And the activities which are actually being involved, which are noted under activity, and activity cost data, that is overhead activities or activity cost, are also given. So under activity we are having setups and the activity cost is 60,000. Material handling 30,000. Power 50,000. Testing 40,000. So total comes to 1,80,000. Now, what are the requirements? Requirements are: number one, calculate the consumption ratios for each activity. So, while discussing the theoretical part, I have already shown you certain percentage how it is allocated. So, requirement number one is calculate the consumption ratios for each activity. Number two, group activities based on the consumption ratios and activity level. Number three, calculate a rate for each pooled group of activities. So you are going to create the cost pool. Using the pool rates, calculate unit product costs. So there are four specific questions. Number one, calculate the consumption ratios for each activity. So we are going to calculate the consumption ratios for each activities as under. Just have a good look. So what we are doing, we are calculating consumption ratios grouped under, and there will be four columns for the same. First one is overhead activity, then your products, deluxe and regular, and last but not the least, activity driver. Now we'll be calculating, no doubt, but remember you are given certain activity, okay, that is setups, material handling, power, testing, so on and so forth. So activity costs are also given. So what we are required to do? We are required to calculate the consumption ratios. So jotting down into four heads. First one, overhead activity. Then we are going to jot down setups, then material handling, then power, then testing. Calculation will be doing, no problem. But activity driver will be for setups, production runs, as it is given in the question. Material handling, number of moves. Power, obviously machine hours. Testing, definitely direct labor hours. So these are the activity driver. And how you calculate? 10 divided by 15 for deluxe. Just have a look. Production runs 10, 5, 15. Number of moves 120, 60, 180. Machine hours 10,000, 90,000, 1 lakh. Direct labor hours 5,000, 45,000 and 50,000. Now, total is 50, but machine hours are more. So machine hours here it is predominating because machine hours are more as compared to the labor hours. Mind it. Now we are going to calculate the different consumption ratios. How 10 divided by total 15 for T lakhs and 5 divided by total, that is 15 for regular, and it comes to 2 decimal places, deluxe 0.67 and regular 0.33. Activity driver being production runs. Material handling 120 by total 180, 120 for deluxe and 60 out of 180 for regular. It comes to again 0.67 and 0.33. Activity driver we have already chosen, number of moves. Power, definitely machine hours are predominating. Hence 10,000 divided by total machine hours for deluxe and 90,000 divided by 1 lakh for regular, that is 0.10 and 0.90. Now testing, that is 5,000 divided by 50,000. Just have a look. Direct labor hours, total direct labor hours are 50,000. For deluxe it is 5,000 and for regular it is 45,000. So consumption ratio automatically 5,000 divided by 50,000 for deluxe and 45,000 divided by 50,000 for regular. Next comes batch level, setups and material handling. Batch level, because in the question it is said group activities based on the consumption ratios and activity level. So your answer is batch level, setups and material handling, and unit level activities, power and testing. And in the third part of the question, it is given calculate a rate for each pool group of activities. So we are going to have, that is batch level pool, unit level pool. Setups, that is batch level 60,000, material handling 30,000, total is 90,000, divided by total runs 15. So pool rate is 6,000 per run. So setups and material handling coming under batch level, and unit level power 50,000, testing 40,000, total 90,000, and machine hours we are going to have predominating 1 lakh. So pool rate is 0.90 per machine hour. Now, what is the next question? Next question is using the pool rates, calculate unit product costs. So pool rates means also the cost driver rates, and we are having, that is calculation of unit cost. So far activity based costing is concerned. So there are two products, deluxe and regular. So prime cost is given. Then we are going to have overhead cost, that is batch level pool 6,000 into 10, that is 60,000, and 6,000 into 5, that is 30,000. Then unit level pool, we have already calculated the rates, 0.90 into 10,000, that is 9,000, 0.90 into 90,000, it comes to 81,000. So total manufacturing cost comes to 1,08,000 and 4,80,000, and unit produced 5,000 and 50,000. So 1,08,000 divided by unit produced 5,000, we get the unit cost, that is total cost by units. It comes to 21.60 and also 9.60. Hope you have understood this. Now we are coming to our next question. Just look into the question, then let me discuss the question, then let me come to the solution. Remember, activity-based costing is such chapter where from you will be having definitely one question, and also you will be having MCQs. Okay, you have to follow your study materials, you have to solve problems from your study materials, worked out problems, and also you have to refer to the MCQs which are given in the study material. Now look into this, then I will proceed to solve the problems. Jet light produces headlamps for campers, hikers and other people who want the convenience of a light at night without carrying a flashlight. It currently allocates overhead cost using direct labor hours. So that is a traditional based. But the controller has recommended an activity-based costing system using the following data. Activity, then cost driver, cost, activity level, product A, product B. So under activity, we are having production setup. Under cost driver, it is given number of setups. Cost is 50,000. Activity level for product A is 10, product B is 15. Materials handling and requisition, number of parts is the cost driver. Cost is 15,000. For product A, it is 18 and product B, it is 36. Packaging and dispatching, cost driver, number of units dispatched, cost is 30,000. Activity level for A is 45,000 and for B it is 75,000. What you are required to do? Number A, compute the amount of overhead to be allocated to each product under activity-based costing. Next, compute the amount of overhead to be allocated to each product using direct labor hours as the allocation base. Assume that the number of direct labor hours required to assemble each unit is 0.5 per unit of product A and 1 per unit of product B. The company produced 45,000 units of product A and 75,000 units of product B. Next, should the company follow the controller's recommendation? Now, what the controller is asking for? Controller is asking for application of activity-based costing, and he has jotted down the various activities with respective cost drivers and the common cost, that is overhead cost, and the various activity levels with reference to product A and product B. So what we are going to do, we are going to have the various rate first. So we are having production setup, we are having materials handling, we are having packaging and dispatching. So rate we are going to have, okay. So first one is production setup. How do you get the rate? Rate comes to 2,000 per setup. That is 50,000 divided by 25 setups. It is given 25 setups. Okay, because 10 plus 15 total comes to 25. Now, then 277.78 per part. It comes to 15,000 divided by 54 parts. That is 18,000 plus 36,000. It comes to 54. Then comes 0.25 per unit dispatch. That is 30,000 divided by, that is 45,000 plus 75,000. It comes to 1,20,000 unit dispatch. Then 20,000, that is 2,000 into 10 setups. Then 5,000, that is 277.78 into 18 parts. Then 11,250, that is 0.25 into 45,000 unit dispatch. So we have calculated all, you see A, B, C, D, E, F, product B and total. Okay, so we get the amount, taking into consideration amount of the cost pool divided by cost driver, so that we can get 2000 to 2000 per setup is the cost driver rate. 277.78 is the cost driver rate per part. Then 0.25 per unit dispatch is the rate. Then 20,000 is the rate. How do you get? That is 2000 into 10. Then 277 into 18, that is 5,000. 0.25 into 45,000, it comes to 11,250. That we have written. So total overhead comes to 36,250, 58,750 and 95,000. So total comes to 95,000. So it is tallied. Now, what we are going to have, number B, it is given, compute the amount of overhead to be allocated to each product using direct labor hours as the allocation base. Assume that the number of direct labor hours required to assemble each unit is 0.5 per unit of product A and 1 per unit of product B, and company produce 45,000 units of product A and 75,000 units of product B. So we are going to solve part B. How do you get 0.5 hours per unit into 45,000 units produced? It comes to 22,500 hours. Okay. Then 95,000 overheads divided by 97,500 hours into 22,500 hours. It comes to 21,923, the overhead. Then 95,000 overhead divided by 97,500 hours into 75,000 hours. So it comes to 73,077. Okay. So that total overhead is 95,000 we have taken care. Now, in the second part, the answer is, that is, your requirement is amount of overhead to be allocated to each product using direct labor hours. So, direct labor hours, we have calculated for product A 22,500, okay, and 75,000. So total 97,500, and accordingly we have calculated B and C from working notes, so that overhead total 95,000 is allocated to product A as 21,923 and B 73,077. And the third part, what is given? In the third part it is given, should the company follow the controller's recommendation? So that is a decision that we have to take, taking into consideration the traditional as well as the ABC view. So your answer should be exactly in the lines, the traditional costing method has appeared to allocate too little overhead to product A and too much overhead to product B, because it is evident from result. Product B appears less costly and therefore more profitable than it should, which could affect a number of decisions such as whether to continue producing the product and the price at which to sell it. Activity-based costing provides a more detailed and accurate allocation of overhead cost. However, the more accurate method is also more expensive. Remember, if we are going to apply the activity-based costing, it is an expensive issue. But once you incur the expense and get the benefits of activity, then your savings will be much more, so that you can rationally arrive at the product cost. The ABC system should be adopted if the benefits from improved information exceeds the additional cost required to obtain the information. So that is a main criteria over here. You are going to implement the activity-based costing, which is going to incur more cost. But the benefits, if you are going to get more than the cost, so definitely you are going to apply or implement the activity-based costing. Hope it is clear to everybody. Just a minute. Let me see any question. Now we are coming to next. 1 minute, please. Sorry. Now we are going to have the last problem so far your activity-based costing is concerned. Memory Media is considering a change to activity-based product costing. The company produces two products, CDs and DVDs, in a single production department. The production department is estimated to require 4,000 direct labor hours. The total indirect labor is budgeted to be 4,20,000. Time records from indirect labor employees reveal that they spend 40% of their time setting up production runs and 60% of their time supporting actual production. The following information about CDs and DVDs was determined from the corporate records. Number of setups, direct labor hours, units, and total CDs and DVDs. What is the first question? First question is determine the indirect labor cost per unit allocated to CDs and DVDs under a single plant-wide factory overhead rate system using the direct labor hours as the allocation base. So obviously it is volume related and having single rate, which is also called multiple rate. Now let us come to the solution. Single plant-wide rate, indirect labor is given 4,20,000 and it should be divided by, that is 4,000 direct labor hours, so that 4,20,000 divided by 4,000 direct labor hours, we get rupees 105 per direct labor hour. So that is a single plant-wide rate. Then we are going to have allocation of overhead costs, CDs and DVDs, direct labor hours 2,000, plant-wide rate is 105 per direct labor hour. So direct labor cost comes to 2,10,000 divided by 75,000 units. So indirect labor cost per unit, it comes to 2.80 and 2.80. It's same. Now in the second part, it is given determine the activity pools and activity rates for the indirect labor under activity-based costing. Assume two activity pools, one for setup and the other for production support. Now let us come to the next part, that is activity-based rates, activity cost pool. How we get, that is setup activity cost 4 lakhs multiplied by 40% as given 1,68,000, and production support activity cost 4,20,000 into 60%, it comes to 2,52,000. So we have jotted down activity cost pool. Setup cost is 1,68,000 and production support is 2,52,000. Activity based 1,600 setups and 4,000 direct labor hours, so that activity cost per setup comes to 105 and production support comes to 63 per direct labor hour. Okay, so you see it is quite different to that, that is indirect labor cost. Now in the third part, what is given? Determine the activity cost per unit for indirect labor allocated to each product under activity based costing. If you are going to third part, simple, you see CDs and DVDs, activity based usage, activity rate. If we multiply this, we get activity cost. And for DVD, it is also activity usage into activity rate. We get activity cost. Setups, 500 setups. We have already jotted down the calculation, that is 105 per setup. It comes to 52,000. Production support, 2,000 direct labor hours at the rate 63. It comes to 1,26,000. Total is 1,78,500. Unit 75,000. So activity cost per unit comes to 2.38. On the other hand, for DVDs, it comes to 3.22. You see, for CDs and DVDs, it was 2.80 each, but here it is different, that is 2.3 here and 3.22. 2.80 is 2 for this, that is 2.80, now it is 2.38, and 2.80, now it is 3.22. So what conclusion we are going to have from this? The per unit indirect labor cost in number A distorted because setup activity is consumed by the products in a different ratio from the direct labor. CDs required 500 setups over a volume of 75,000 units or 150 units per production run, while DVDs required 1,100 setups over the same volume, approximately 68 units per production run. The activity-based costing method properly allocates the setup related activities so that DVDs, the setup intensive product, received a larger proportion of the setup activity cost, while the CDs received the smaller portion. The single rate system allocates overhead only on the basis of direct labor hours. Since the direct labor hours are equal for each product, the allocated indirect labor will also be equal. Again, this is clearly a distortion since the setup activity, 40% of the indirect labor is not consumed equally by each product. So you may write different conclusion also, jotting down the results. Okay, here it is 2.8. Okay, but activity based costing, it comes to 2.38 and 3.22. So accordingly we may comment. So with this, I conclude activity based costing. Hope you have understood. Now we are having few minutes time so that we are going to start the another topic, that is transfer pricing. Now, before we go to transfer pricing, just a minute. Now, hope you can see the file. Now, before I come to the transfer pricing, this is a very, very important topic for the examination is concerned. And let me tell you some concepts with reference to transfer pricing. You see, pricing may be of two types. One is called product pricing. Another one is called transfer pricing. By product pricing, we mean how we are going to price the product that we are going to sell our customers. So that is a different phenomena. But when I am going to take the concept of transfer pricing, so there are two important concepts which will emerge. One is transfer, another one is pricing. Now this transfer pricing definitely starts from transfer. That means when there is an internal transfer between two divisions in a company, say division A and division B of A and B company, where A company is transferring goods or services to the another division B, then the question comes, at what price the transfer should be made so that there will be divisional objectives will be fulfilled. That is, transfer divisions A's profit will be maximum, transfer divisions B's profit will be maximum, and there will be overall profit maximization of the company as a whole. Remember, in the context of transfer pricing mechanism, we are going to consider that there is decentralization and no question of any centralization. There will be a decentralization, means that each division having the power to make some decisions individually and also having the cost control power in their hands. And each one should be considered to be a separate unit where investment has been made, then costs are going to be incurred, revenues are going to be earned, so that there will be adequate return on investment. Okay, so these are the basic considerations which are required in the context of transfer pricing mechanism. Now, again I repeat, transfer pricing is not same as product pricing, because in product pricing, a company is going to manufacture products and to sell the products externally to the external customers, and by that their profits is maximum. But when I am looking into the transfer pricing mechanism, although pricing is common, but there is a word or buzzword that is called transfer, which conveys separate meaning. Okay, so with this, I'm going to take into consideration the transfer pricing. Now, this transfer pricing is also having certain conceptual things that you have to understand. So, first let us go to define what is called transfer price. Transfer price can be defined as the price charged for products exchanged in internal transactions between sellers or transferors and buyers or transferees who belong to the same organization, usually a decentralized organization. Now, I'm giving emphasis on this decentralization because there will be some certain divisional autonomy that should prevail. If divisional autonomy is not prevailing, if the managers, they are not given the authority to make a decision for his own division or her own division, the question of transfer price will never arise. So transfer pricing is actually applicable in the context of decentralized organizations only, nothing else. Now, what is transfer price? A transfer price is that notional value at which goods and services are transferred between divisions in a decentralized organization. I'll discuss. In divisionalized companies where profit or investment centers are created, there are likely to be internal divisional transfer of goods or services, and this internal transfer creates the problem of transfer pricing. Now, why I have said notional? you see, as a transferor division who is transferring the goods, and if it is transferred to the transfer division, then automatically there will be internal sale by the transferor division and internal purchase by the transferee division. So purchase and sales or sales and purchases cancels out. Nothing will be recorded in the books of the company as a whole. That's why it is called a notional exercise. But what is most important? The most important idea is each division is considered to be a profit center responsible for profit made or loss sustained, and also an investment center. Manager is responsible for the performance of his or her divisions. And in a decentralized organization, each manager should have some divisional autonomy. Okay, now transfer pricing is a problem. Why I have said that is, there are likely to be inter-divisional transfer of goods or services, and this internal transfer creates the problem of transfer pricing. So why it is said problem of transfer pricing? Because there is no A plus B whole square like formula for setting transfer prices. So transfer prices cannot be A plus B whole square formula like that. Although there are certain transfer pricing mechanisms which are applicable in practical life. But setting a transfer price which will increase the transferor division's profit, that will also increase the transferee division's profit, and that will also increase the company as a whole profit. That is called overall goal congruence. That is the primary objective of this transfer pricing. Now, if we look into the next, in such companies, a satisfactory system of transfer pricing is necessary for measuring the performance of divisions. Okay, so each manager must be motivated to transfer certain goods and services to the transferee division at a price. If it is transferred free of cost, then automatically no motivation is available to the manager of transferor division. Hence, there is the question of profitability, and the profit center concept will be totally jeopardized. So that's why a satisfactory transfer pricing is necessary for measuring the performance of divisions. Transfer prices are normally set for intermediate products. Now, what is intermediate product? Say, suppose I am just giving an example. You are manufacturing a ball pen. Okay. Now, as a transferor division, you are manufacturing the cap of the pen, and body of the pen, including refill, is manufactured by the transferee division. Now, you cannot get this cap available for sale in the market. You cannot get. That's why it is called intermediate product. So transfer prices are normally set for intermediate products, which are goods and services that are supplied by the selling division to the buying division. The goods that are produced by the buying division and sold to the outside world are known as final products. So intermediate products, the transferor division is going to sell to transferee division, then transferee division is completing the product and selling it to the outside customers. Okay, now there are certain objectives of transfer pricing system that we are going to discuss in our next class. So whatever I have said about activity-based costing, and what is referred, so for the transfer pricing mechanism is concerned, please keep this in your mind, and then we are going to start with this topic in our next class. Although I'm just make a brief objectives of transfer pricing system, a question arises as to how the transfer of goods and services between divisions should be priced. Okay. The price charged to the interdivisional transfer of goods and services is revenue to the selling division, that I have already said, and cost to the buying division. Therefore, the price charged will affect the profit of both divisions. Benefit, that is revenue to one division, can be created only at the expense of the other division. For example, the selling division will benefit from charging higher prices for such transfer of goods and services. However, for the buying division, this will result into higher cost. The transfer prices thus can have impact on the evaluation of each division's performance and measures applied for such measurement of performance. So remember, if transferor division is going to charge higher price, then its revenue will be more, its profit will be more. But on the contrary, transferee division, that is buying division, cost will be more, its profit will be lower. So definitely the manager of transferee division, that is buying division, will not accept the higher price. So there will be a tussle between these two divisions, and how the transfer price is going to be fixed, that we are going to discuss in our next class. Hope you have understood what I have said. So for the introduction of the phase, so far the transfer pricing is concerned, so please try to understand the subjects and please try to apply your sense. Don't try to mark. If you are going to mark the subjects, then automatically you are not in a position to answer the questions correctly in the examination hall. So I would request you to understand the concepts, then make the concepts, try to understand the intricacies which are actually being required to solve a problem. Without going through the theory, you are not in a position to directly solve the problems. That will vitiate your objectives. Okay, with this, I say goodbye for the day. Thank you for attending and having your patience for listening to me. Hope you have understood, and I will join in the next class. Goodbye. Thank you. Thank you very much.
Thank you, sir. Thank you, sir. Okay, sir.